Good morning, everyone. In today's video, I'd like to do a quick follow-up on our trade in RNG. RNG is a trade that we set up over the weekend. That was on August 30th right here. We set it up in this video where we had 4 different options trade ideas. That included a long call, that included a call debit spread, that included a butterfly, and that included a diagonal. So 4 different options for 4 different really account sizes, risk tolerance, whatever you'd like to think of. Now, off of that trade in RNG, we were trying to target a move towards this 320 zone. That was the big pivotal number that we were looking at. And the reason we were looking at 320 was a result of having 1, 2, and 3 squeeze signals right here, all of which suggested, at least to me, that we would try and get this burst move up higher. Didn't obviously expect this to happen, but we did get it today. So today RNG is up close to 8.95, breaching on 9%, a little bit more. And it doesn't seem all that unlikely that we'll hit the 320 zone. Now, I think this is a brilliant opportunity to try and show you ways that you can use the volatility boxes to try and take targets off at smart areas even before we hit the full 320 zone. So if I start by coming in here, I've already loaded in the indicator generator for RNG, so I'll show you that in just a second. But I think it's easier to see this on the dashboard, mostly because it's a lot faster. You can monitor a whole series of symbols. Now you'll notice in the case of RNG here, our current price, which is this black dot, is beyond what would be our original zone to try and take a short in RNG. That's to say, if you were long, these are places where we normally be looking to take targets, right? So we've already breached our aggressive volatility box. The short target was that first zone that I started to peel off some contracts in. Now, if I come in and we change this to our conservative model, you'll notice that we've also breached our conservative short target. This is the second zone. So that first target, or the second target area, excuse me, is 316.13. The first target area today was 311.14. And our final goal is to try and see if we get this move to 320. Now, if I show you what that looks like on a intraday chart here, and we'll load in our stock volatility boxes, you'll notice that really that short target zone was this gray target line. So this is that first zone off of our aggressive volatility box in which you can start to look at taking off targets. These are smart zones in which you expect price action to start to reverse or at least exhaust for a little bit. Now, in the case of RNG, we of course just kept shooting right through it, right? We didn't get our edge signal, no other confirmation. So this is nice to see when especially we're long this position. Now, next up, we have our conservative volatility box. So if I hide the aggressive one, using the conservative volatility box, this is where we've hit our second conservative short target zone. And this is the second place in which I was looking to take off targets. And now really for the final batch, you'll see the 320 zone happens to overlap real nicely with our conservative volatility box, where this would still be inside of our clouds. This is the zone that we're looking at trying to take a target. And this ended up becoming a very short trade. We expected to give this a lot longer time frame. If you remember, we were setting up the September series options with 18 days to expiration, thinking that even 18 days may not be enough time. Of course, no one saw this sort of a move happening where you would be up 9.11%, but that ends up becoming a really nice move. Now, for those of you that are trying to figure out what does this mean for options pricing, if I come back into the Analyze tab here, these are the 4 trades that we had set up along with their prices. So I'd like to just quickly show you what the price is. So in the case of our single call here, we at the time of the recording of the video on August 30th, it was trading for 490, currently trading for 1490. Right, so that's a nice $1,000 gain there. Let's revert this just so we can see what it ends up becoming. Then our call debit spread right here, you'll notice was trading for $3, and these were all our conservative prices where we took the midpoint of the mid and the natural pricing. So that was trading for $3 for a $10 wide debit, currently trading for $5.55. So again, a pretty nice return. Obviously not as nice as the long call, but that's also where you were selling a call, so less risk required. Now, the butterfly is the one that I thought was semi-interesting here. We were looking to buy this for $1. The cheapest we could have bought it for was 25 cents, but I don't think you would have gotten a fill there for 25 cents. However, if you take a look at the current price here, that's up $1.70. So that's a fairly nice return on a $1 sort of investment, right? Or a $100 investment over just 2 days. And then finally, the diagonal or the calendar, excuse me, we were looking at it for $1.45, currently trading for 2.60. So all in all, some really nice trades, but this should give you an idea of what kind of gains you can be expecting for different sorts of strategies, depending on if it was a multi-leg versus just a straight up call. Of course, the call gave you the most quote unquote profit, bang for your buck, but that's also where you had the highest risk involved. So anyways, that's the trade recap in Ring Central. Hopefully this gives you an idea of not only how the options pricing moved in just a 2-day span, but also how you can use the squeeze signals along with the volatility box to really find some nice setups in which you're really trying to find confluences of multiple different factors and then having some pretty nice profits. All right, so hopefully this video helps to give you an idea of not only how options pricing works just a tad bit more. Of course, it was only a 2-day pricing period, but also how this pattern really plays out more times than not. It's the idea of having multiple squeeze signals. If you can start to overlap things like short interest, that starts to become even more interesting. All right, so I hope this video helps to give you all an idea of not only the options pricing, but how to use this pattern, multiple squeeze signals, along with fibs, along with the volatility box to have some fairly consistent high probability trades, especially where you can now craft multiple different options ideas based off of whatever's good for your account size. All right, good luck trading the rest of today, and we'll see you in the next update.